Okay, let's take a moment, look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We are here just to spread the word of how BTA analyze the markets, how we look at the markets. And this is Rod from BTA. And we are known as the middle traders. We are not going to get in that top, but we will. I'm telling you, we will make money, lots of money in the middle. We are the stock market masters. And sometimes it seems as though we can see the future. Okay. What I want to discuss today, now in this video, is why we had the follow through day yesterday on the Standard & Poor, the 26th, May the 26th. Well, why did we choose to buy Microsoft today, go long Microsoft instead of Apple? Microsoft instead of. Here's Apple's initial fundamentals. We look at 23 initial fundamentals, just the beginning fundamentals, to see if a company is even worth investing in. And normally we want to see 70 to 80% or better. You see, Apple is at 61. But Microsoft is not much better when it comes to initial fundamentals. But what we didn't like, one of the things we really didn't like about Apple is the debt. 150% debt. We don't want to see a lot of debt. Apple got the debt to equity ratio is off. We didn't like that. Okay, so that's on the initial fundamentals. That's the real reason why we chose Microsoft over Apple. So we go to Microsoft. Okay, the initial fundamentals for Microsoft, and as you can see, it's not much better. The out of the 23 we look at, it's still 61%. So neither one of them is in that 70, 75, 80% range that we like. But when you get down here to the debt, the debt, the debt, okay, is a pass for Microsoft. That tipped us to Microsoft instead of Apple on the fundamental side. And we just talking about fundamentals. Okay, just fundamentals. Okay, so now, besides that, okay, I want to show you a web. All right, it's called Zacks. And after we do our initial fundamentals I just showed you, our initial fundamentals that we look at, we like to go into Zacks and see what the analysts are saying, because Zacks tracks the analysts and give you what the analysts think is going to happen in the future. Well, we're not concerned about the ranks and all that right now. I want to go down to the detailed estimate. This is for Apple. Apple's detailed estimate. Well, guess what? Right here, we didn't like this. The current quarter that we're going to report, that Apple's going to report, the current quarter in June. Okay. The current quarter is the quarter that's coming up. So the quarter is coming up for the June quarter. Okay. We're going to have to report. Now it's looking at negative 12.31% in growth. So it's going to be negative growth compared to the previous year. Okay, negative growth. We don't want to see that. That negative growth, Apple going to have negative growth. A bad quarter is going to report in June, according to the analysts. If we go down here, scroll down further to the bottom, you can see what I'm talking about. Okay, so if you notice, 0.3, $1.30 in earnings per share. When we talk about, I should have clarified that. When we talk about negative growth, we talk about earnings per share. Earnings. We want to know what the earnings are looking like. Okay, the earnings. So if I go back up here to where we was at before, it says growth estimates for the earnings. Okay, we talk about for the earnings. The bottom line is the company making any money. Stop the fancy nonsense on Wall Street. Bottom line, I want to know if you're making any money. Are you earning any money? Okay, because if you're not making money, why am I going to invest with you? I don't want to invest with anything that's not making money. So, but when you look at Apple in the quarter coming up, the reporting quarter coming up in June. Last year in June, they did $1.30 per share in earnings. $1.30 per share in earnings. Well, the consensus estimate, the estimate of all the analysts that come together, they saying they're going to report this June $1.14. So that's a negative growth. From $1.30 last year to $1.14, that's negative 12.31% in growth. We don't like that. Okay, we don't want to see a negative growth quarter. We don't like that, especially the most recent quarter, the quarter coming up, the recent quarter coming up. So that also was a very negative mark on Apple. Okay, not good. They're gonna earn money, but less money this quarter compared to the same quarter the previous year. They're not growing. They're earning money, but they're not growing. Okay, now if we go to Microsoft and look at the same detailed estimate, you see here they're growing less. They're growing. It's not that great. It's not double digits like we would like. We like to hit those doubles. It's not double digits, but it's not negative compared to last year. Let's go down here further and you can see what I'm talking about. Look right here. Last year, for that quarter, the June quarter, and in June quarter, okay, it was $2.17 in earnings per share. This year, they're looking to report $2.34 for the current quarter coming up in June. So that's a growth of 7.83%. Next quarter, compared to last year, 227, they're going to 248, 925. And you can see they didn't in the year, current year, compared to the previous year, and in 2023, it's still, they're growing. No negative quarter. No quarter where they're losing their growth. They might be, they might have been making some money at Apple. They are still going to earn money, but less money than the previous year. But that's two of the reasons fundamentally that we decided not to go with Apple and decided to go with Microsoft. Now, why are we concerned about whether it's Apple or Microsoft? Well, look, the way we see it is the Standard & Poor had a file through day. We would have bought the file through there in the Standard & Poor today, but it gapped up too high and ran off. Well, we figure Microsoft is directly correlated with the Standard & Poor. In other words, if the Standard & Poor goes up, Microsoft probably going to go up. If the Standard & Poor go down, Microsoft probably going to go down. They move in unison. They move together. They move in unison, okay? So we wanted to have some exposure to the Standard & Poor, so we decided to buy something that we know that's directly correlated with the Standard & Poor. If the Standard & Poor go up, it's going to probably go up too, unless some bad news come out or something like that. So we know Apple and Microsoft, Google, those things are like that. If the market is going up, they probably go up too. But we wanted to choose the best out of Microsoft and Apple. Hey, let's go with Microsoft instead of Apple. And here, just to show you here, if we look at 2022 here, for Microsoft, this is for Microsoft. This is all 4 quarters now. I showed you the current quarter in June and the next quarter, but now I'm going to show you all 4 quarters. Well, we reported 227 already in the first quarter, 248, okay, in 2022 is what we're looking for. And second quarter. And then we got 222 coming for the third and 234 coming for the fourth quarter. Annually, for 2022, 932. Okay. And if you look up here for sales, they got good sales coming in. And with Microsoft, for the current quarters and the quarters coming up and for the whole year, it looks halfway decent. It looks a little better than Apple when you look at it from that aspect. Now, also, it looked better than Apple technically. Okay, I'm not going to go through Apple's technical picture right now, but if you just look at Microsoft right now, this is the chart of lowest. Okay, and as you can see, lowest turned positive about 5 days ago. The blue line is below. Prices normally is going to be in that upswing. And when the red line get above price is normally probably going to be on that downswing. Okay, so when the line flips from above to below, that's our signal. That's the change in the immediate swing. Lowest stands for L for launch, O for of, I for immediate, and S for swing. The launch of the immediate swing. It launches off the swing. So you can see here 4 days ago, lowest turned positive here. Okay, it got below the price. It said that, hey, we may be going into an immediate. The moving average of 21-day moving average. Okay, Microsoft got above the 21-day moving average yesterday at the close and traded up and closed right at this here upward trending trend line. I mean, this downward trending trend line across the highs. I'm sorry, the downward trending trend line across the highs. So we got above the 21-day moving average. We got above this first resistance area right at this fractal right here. And this red line is a weekly level, a longer term resistance area. That was prior support, long-term resistance, key long-term resistance on the weekly chart. We got above that. So we cleared the 21-day, we cleared the first level of resistance, we cleared the weekly chart, red line of resistance, and now we're coming right to this downward trending trend line across the high. Notice the MACD gave you a bullish crossover, and the histogram is expanding, telling you that the momentum is increasing. So the chart of lowest is saying, hey, Microsoft is not looking that bad. Apple is not looking this good. Okay. Apple is not looking like this. All right. So, and we have here on this chart also, you got kind of somewhat of a double bottom. Technically, it's not as long as we like. We like to see it developing over weeks. This is over days, right? A couple of weeks, but it's on a daily chart, but it's not enough weeks. But, okay, but it's close. The high right here in the middle of the pattern. So we broke that. So we broke the first bottom, the second low was lower than the first low. That's good. That's the shakeout. That's what you want to see in the double bottom. And we rallied back up. Lowest gave us the signal for the immediate swing upswing, and now we cleared the 21-day and we broke these resistance levels. Lowest is looking good. Okay, so that was positive for Microsoft. And the moving averages here. This is our moving averages. The white line is the 5-day moving average. The green line is the 9-day. Well, look right here. We got our bronze crossover here with a 5 cross above the 9. Prices got above both. And we're above this 21-day moving average that seems like it's starting to turn a little bit. Right here in the volume bars, well, we want to see volume increasing on this up as the prices are moving up. Well, right now, prices going up on lower volume, okay? That's not good. We'd rather see that volume being higher volume and higher than above average volume and higher volumes in the previous day. That'll be showing accumulation. Well, the volume, we need to see a change in that, right? That's not the best picture. Okay. So let's look at volume in the well, first let's just go to structural chart, and we kind of saw that already with Lois. As you can see, we got this internal trend line here that was pretty strong. We just got above that. We're above this horizontal, the weekly, the red line is a weekly resistance area. We got above that. Okay, so we're starting to break these downward trend lines, internal trend lines, and support levels, okay, on this here daily chart of Microsoft. You can see we got another internal trend line here, and it's all coming together in the area of confluence. A lot of moving averages, a lot of trend lines, support and resistance levels is coming right here together. We're breaking above that. That's great. We already seen the double bottom, and we've gotten above the middle point of the double bottom. That's great. So the structurally, it's trying to do better. It's trying to do better. It's in the immediate upswing. Can the upswing turn into an uptrend? Well, we're going to keep an eye on that. Now, this is a chart. Basically, I wanted to show the MACD. We got a crossover, bullish crossover, histogram is expanding. Look at the stochastics. We got a bullish crossover went into the overbought area. Well, we actually want to see that because that means the higher this stochastic goes, that means that prices is closing higher and higher within this range. That's what we want. And look at the KST. It's crossing over. This is a longer term momentum indicator, and it deals with a lot of different rate of changes inside of the calculations. We get into that later, but what you want to see is the blue line crossing above the magenta line, a bullish crossover. We got that. So momentum is coming in to Microsoft. All right, momentum is coming into Microsoft. Here we have the RSI. Here the RSI is getting above 50, right? So this horizontal level right here is 50. The RSI is getting above 50. And it's positive. It's at 4.22. It's positive by 4.22% over the last 14 days. So the rate of change is positive. The RSI is getting above 50. Stochastic and MACDs are giving us bullish crossovers and expanding and momentum. And look at the money flow down here at the bottom. The money flow, okay, which is basically volume weighted RSI, okay? Look at the money flow. It was negative. The histogram and the money flow was starting to turn show some positive movement. And now look, it's now turned green. So that's a good sign. Can we see that starting to expand? To say more and more money is coming into Microsoft. But as prices are moving up, you do see the improvement in the money flow. So this is all good momentum signs. All signs of good momentum coming into Microsoft, okay? Now, here is a different look at volume. We saw that prices was moving up on lower volume on our volume bars. And once again, a line chart of closing prices. This line is strictly a closing price, a line of closing prices. That's it. So here's the high. Here's the high of closing prices, the most recent high. Well, price has broken above that most recent high. You can see that. When we bring that vertical line down to the most recent high in the on-balance volume, well, we see the volume is still below it. We need to see that volume get above and follow price. As price breaking out above its high, we need volume breaking out above its high. But this on-balance volume is our most important. Okay, but look at the accumulation distribution line, which is our second most important. Its high is here. We got a vertical line going across its high. Look at that. The accumulation distribution line has broken above its high along with price. It's another way of looking at the volume that's coming in. Okay, and the price volume trend, which is another way of looking at the volume coming in. Here's its high, and prices that price volume trend is broken above its high. So two of the three volume analysis tools that we look at, indicators that we look at, are saying, yes, volume is coming in. So if that on balance volume can also confirm it with us, Yeah, like my daughter said, we Gucci, baby. So now let's look at the point of control. All right. This is basically showing price levels where the most volume was at a specific price. That's what we're looking at. So when you look at this yellow line here, just say somewhere around 260, it was a lot of volume at that price level. And this yellow line is the point of control where the most volume was at that particular price. So, and when you break above or below those point of controls, you normally go back to the next one. Okay, that's normally what happens. So if you notice here, back here, we broke below it, we went down to the next one. Okay, we broke below it here, we broke below this point of control, we went down to the next one. Broke below the point of control, we went down to the next one. But now look, we just broke above this level of point of control. We fluctuated on the double bottom. We came above it. We broke above the double bottom, the middle point of double bottom. Are we going to make it back up to this point control? Well, if the market keeps rallying, it's a possibility. If the market really rallies next week, it's a possibility we could go back around 280 something, 283. Okay? We could go back to around 283. So Microsoft, which is around 283. So that's positive. That looks good. And here is the Ichimoku Cloud. All right. Well, we did get above the yellow and the magenta. With the yellow is a faster moving average. Okay, on the Ichimoku Cloud, the magenta is the slower one. And so we need a crossover. We need the yellow to cross above the magenta. That's called a TK crossover, where the yellow, which is the Tkinson, and the magenta, which is the Kijisen, cross each other. So we haven't got that bullish crossover on the moving averages yet on the Ichimoku Cloud. We haven't got that yet. Okay, the cloud is negative, turned down. That's not good. So what we need on this Ichimoku Cloud, first and foremost, we need a crossover. Okay, we need the yellow line to get above the magenta line, and we need price to stay above all of them. And eventually, we want to see this cloud flip back to positive, like it is right here. But so it has a way to go. We can trade up into this cloud, and then we got to start being concerned of whether or not this might be an area of interest where we go into the clouds and get some turbulence there, and we can't seem to get through it. Okay, so that's important. So this is the reason why we decided to go Microsoft instead of Apple. Fundamentally was the real reason. We want to stick with fundamentally strong stocks. But Microsoft also had a better looking chart. So we took a position in Microsoft because Microsoft has a better looking chart. And we also took a position in the ITOT. Go back to the previous video we did earlier about the 21 day, the moving average, okay, that must hold support, the moving average that must hold support. And that video was all about the 21-day moving average. Okay, go back and look at that. And in that video, we actually took a look at the ITOT, which is the total market ETF, and it looks a lot better. So we took a position in Microsoft, we took a position in total market ETF, we took a position in IWM. That looks good on the in the other video. Look at that chart. We took a position in DIA. So we had to follow through yesterday. So that gave us the green light. We didn't really see a whole lot of stocks that we really want to buy. Okay, fundamentally strong stocks, leading stocks, and leading industry groups breaking out of sound-based patterns. So we took a position in some of the ETFs. Now, what's important is that we get ready for our Bollinger Band MACD, okay, RSI stochastic MACD strategy next week. It is setting up the signal week this week. If we close good today on Friday, this will be the completion of the signal week. Next week will be the pivot. At that point, we're going to have to take a position, probably increase the position in some of the ones that we have now, but definitely go into the position in some of the other major ETFs. Okay. So look out for the next video. We're going to do a video later on today also on whether or not the Bollinger Band, the RSI, Bollinger Band, RSI, stochastic MACD strategy, whether it actually made it through the signal week. Okay. And if that's the case, we got to look for the pivot week next week. We know Monday, the market is closed because of the holiday. So Tuesday, it's a possibility if the market doesn't pull back that on Tuesday, that strategy can hit and we could take a position in that. So we're going to be looking for that. We're going to keep you posted, keep you updated on what's going on. I hope everybody enjoy their weekend. Take care. Look out for the next videos.